Nasdaq just crashed 5% in a single trading session, and the S&P 500 wiped out 2.7 trillion in market value, gone in hours. If this continues, are we looking at the start of a global financial crisis? Are we watching the first domino fall right now without even realizing it? Before you panic, or worse, freeze, you need to understand what's actually happening underneath the surface. Who pulled the trigger, why now, and what's coming next? Over the past few months, AI and mega-cap tech stocks surged non-stop, fueled by hype and unrealistic expectations. But when earnings guidance failed to match the narrative, hot money had only exit, and they ran fast. Then came the real shock. New macro and employment data signaled that the Fed may delay rate cuts again. For high valuation growth stocks, that's a death sentence. Liquidity tightens, risk aversion spikes, and institutional selling triggers a violent chain reaction collapse. What we saw today wasn't a dip, it was a stampede. This isn't random turbulence, this is a cycle turning point. Markets driven by story and emotion are now being brutally repriced. Capital is rotating out of growth fantasy and into defensive assets, real cash flow and pure liquidity. And if macro data weakens again, we could see the market retest the April lows, or even break critical support levels with no bottom in sight. Here's the real message. The danger isn't the crash, it's that the market logic has reversed. The next few weeks will separate survivor from casualties. Investors without cash will miss the opportunities coming, and those without strategy will get wiped out. Growth sectors could stay under pressure, so it's time to restructure, prioritize defense, and hold cash like it's ammunition. If you refuse to be the last one holding the bag, hit subscribe now. I'll break down market structure, policy signals, and the real opportunity setups, so you can stay ahead while others panic. Subscribe and turn on notifications. Let's prepare for the next major move before it hits.